Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. We have such interesting topics to discuss at the roundtable today, I'm not even going to waste time previewing them. Let's just get right to who's with us. Steve Reitmeister, our editor-at-large for Zacks.com, joins us today, as does Charles Rotblut, our senior market analyst, and of course, Kevin Matris, top stock screener, all from Zacks.com. So, and this comes up, every time you see a bear market rally out there, but I thought it was worth addressing. I figured, what the heck, if everybody's talking about it on blogs across America, why not us, right? This latest bear market rally, real or fake?
Yeah, I'm going to go in the fake department, a bear market rally, a sucker's rally, whatever you want to call it. The market just can't keep going down day after day after day. And there had to be a bounce in there somewhere, whether the shorts need to take some profit and cover those positions, or there's just a little bit more positive sentiment, or just like the negative sentiment just kind of dries up for a little while, and there just has to be a little upward activity. I think that not much of a shock here, seeing a 10, 15%-ish rally, for which actually last week, if you think about it, a lot of us were looking for some kind of bounce somewhere. I thought it needed to head a little bit lower before the bounce, but whatever. You got this bounce here. But why won't it last? I think if you take a look at the economic conditions out there, you take a look we're coming into earnings season again, and the first part of earnings season is what we call pre-announcement season, when all the bad news gets flushed out. So there's going to be a lot of bad news out there. And then third, that a lot of the hedge funds that close their doors to redemptions, they have to reopen their doors again. People are going to see they lost another 15, 20% of their money. They're going to want to remove that money, and the only way to do that is for them to sell the positions to raise cash. So I think you add all those things up, the economy, earnings season, and hedge fund redemptions, I think it's going to be hard-pressed to see this rally go any further, and I expect to take another leg down.
Charles, what do you think, real or fake? And how do you tell?
Well, it's hard to tell. I mean, certainly bear market rallies feel a lot like actual recovery. But one of the things we're seeing here, I'm going to get to the chart, it's interesting. So we've been here, done that. You can actually look on the chart behind me. We've had a long period of setting lower highs. That means every time the index bounces up, it goes up to a lower level than before. And that's a descending pattern. It's very bearish. The other thing, if people look at the chart right at the bottom right-hand corner, you can see stochastics. We were actually oversold on the index. Typically, when we've had that, we've actually had the S&P 500 bounce pretty sharply from that. I was about 2 weeks early in calling for a rebound, but it did happen, so this is not surprising. And when you look at what's going on right now, we're not overbought, meaning the stochastics has not gone to around the 80 range on the chart. So you could make a case for the short term, the indexes to actually rise higher, but it's important to realize, regardless if you're in a bear market or if you're in a bull market, stocks never go in a straight line. You're going to have pullbacks in an uptrending market. You're going to have rebounds in a downtrending market. But right now, when you look at the fundamental data, when you look at the technical data, everything points to lower. In October, I gave a bearish range of 5,600 to 6,300. I'm still sticking with that 6,300 target, but certainly that 5,600 is not so far out anymore.
I guess we can't assume that that sentiment, investor sentiment, is any better today than it was last time we got together.
Well, I mean, it's a little better, probably at least last week. Whether this rally is real or fake, I mean, it's really happening.
That was my thought. I don't know.
There it is.
Yeah.
But whether this is the bottom, nobody really knows. Nobody is willing to stick their neck out on the line and say this is the bottom. Even some of the most bullish people out there are reluctant to do so. Just look at what happened today. We got some economic numbers. I think the industrial output came out worse than expected, and the industrial output rate is the worst it's been in 60 years. So you're probably going to see this rally run into some headwinds. But looking at what has happened last week and what Charles had said, the market was grossly oversold. Yes. You saw a lot of massive short covering. And for some reason, and I think it's just because the market can't go down forever, as Steve had said, there seems to be this air of optimism, a slight air of optimism. Bernanke was on TV talking about the economy may recover at the end of 2009. I think everybody is looking forward to Geithner giving some details on the toxic assets.
Yeah, but he said, did you hear what he said? He said the recovery could begin in 2009. However, unemployment will continue to peak beyond that. Hello.
Well, no,
what
no,
does that mean?
No, that's traditionally the case.
Right.
Okay,
Really?
Yeah, unemployment is a lagging indicator.
Mm-hmm.
It's one of the last things to correct. To start improving. So that's really not a crazy statement. What's interesting, though, is that we now have this, government roadshow that's going on, in a city near you, okay? And they're getting out there and they're trying to talk up the economy. And I think we were talking about before things
Right.
started here that they had to talk down the economy to get the packages approved.
need
Oh
for
my God, we're
stimulus,
going to hell. Okay, so give us money. Okay. Oh, it's not so bad. So now they're hoping that it takes root, and trust me, I hope it does.
Right.
But what I'm saying is, you have to take what they're saying with a grain of salt, because now it's their job to sell the American public like, hey, it's going to get better pretty soon. So we go out to the malls. Okay.
Well, check this talk out then. According to published reports here, less than a month after that $787 billion economic recovery package became law, now, and we're taping this on the 16th of March, last week the Democratic leaders already started talking about possible third round of stimulus. Again, hello, we don't even have any clear-cut signals that the first two rounds worked.
Yeah, I think the market needs to see this second round of stimulus kick in. We need to be able to see if what we have already done is going to work. But I think what's clear, and I think that it was even clear from the message that came out of the G20, people seem to be losing their appetite over additional stimulus. The only thing that I believe really needs to be focused on right now is to figure out how to get these toxic assets off of the bank's books, to be able to get the banks healthier, because they are so beaten down. That is what is stifling lending, and that is what is going to hinder economic growth. So I don't think anybody is looking for a third stimulus. Let's see how this one works. Let's figure out what to do with the banks and then proceed from there.
Charles always has interesting comments on stimulus packages reaction.
Well, I think the biggest mistake the Obama administration made with the second stimulus package is not really sitting down with the Republicans, asking them what type of package you would pass, getting a smaller package passed on what they went for, and then going back and saying, now you have ownership in it, we need more of it, versus passing a big package where there are some questionable projects in it, some good stuff too, but now you're in a situation where you do have some Southern Republican governors saying, I'm not going to take this. You're looking at South Carolina, you're looking at Louisiana. Instead of getting all those people on the Republican side, or at least a solid amount, more than the three token senators, I think, is what he got the vote for it. Letting it fail, he really needed bipartisan ownership. But I think now that we do have it passed, it's going to take some time. Some of the state projects here in Illinois are just now starting to get delegated. We're starting to find out what they are. Of course, at the same time, our governor just wants to pass a 50% increase in taxes. So our stimulus checks might be gone before we ever see
That's a
them.
different round table. There's an analyst out there laying even odds that we're going to get a third round.
It wouldn't surprise me if we got an additional stimulus package, but to me, that's not really the issue. I think what people have to really say to themselves as far as stimulus is just go back in your memory banks and list the top 10 usage of government money that you've seen in your lifetime. If you can even get to 10, okay, I'm amazed. Okay, what I'm saying is we know this is not a political statement. This is both parties are very poor at figuring out how to spend our money, plain and simple. And I think I'm just getting a little tired of that idea. The idea of them spending more money and therefore raising future taxes, that's basically borrowing against the future. Isn't that what got us into this problem, was borrowing against all of our futures? Okay, it's like saying, I'm drunk, but I need to drink a little bit more to get sober. Okay, and I just don't see this making a lot of sense. So they had to do a little bit of stimulus. I don't like the path they've taken on most of the plans, not all of them, but most of the plans. And I think that they'd just be better off letting things digest, seeing where things really are, and if anything, then really letting the American public, whether that be corporations or individuals, decide what they want to do with their money in their own homes, and if anything, maybe give corporations a lower tax rate if they keep jobs in the United States. That's one I'd be for. But all the rest of it and the government deciding where to spend money, we should know by now that that's not been a winning proposition in our lifetimes.
All right. Having said that, and Kevin mentioned toxic assets just a short time ago, I came across something that I thought everybody would kind of enjoy, and I think you guys get a kick out of this too. You know, the often cited magazine cover indicator as far as if a theme, an economic theme makes it to a magazine cover, then you know that we're turning the corner, times are going to be getting better. Well, apparently you can draw a correlation in the television age as well. Simpsons might be a good substitute. This week, last week episode had the Simpson family being foreclosed on in a hilariously satirizing real-life drama, now affecting many homeowners out there. So could this be a sign that the crisis is behind us, or at least we're turning the corner? And we've got our own Homer here to
before my magnificent fastball.
Well, I think
making his dough comment.
Well, I mean, it's definitely appropriate time satire where you had the Simpsons being forced out of their house because Homer took a home equity loan, spent it on a Mardi Gras party, and not really thinking the consequences, only to be saved by his thrifty neighbor Ned. But, it is a sign of the times, and I don't think it's a sign that we're necessarily at the peak. Certainly, if you look at foreclosures, they're rising. When you look at the unemployment rate actually getting worse, we are going to see more people lose their homes. So, no, we're not at the peak of it, unfortunately.
Now, he's the guy that puts the Festivus pole outside his door every holiday season. Any other reactions on that?
How can I follow that?
All right, we'll just kind of leave it right there unless you want to add something.
No, I'm
there.
good.
All right, with everybody here at the round table. Told you it was going to be an interesting one. I'm Terry Ruffalo.